Hello, traders. It's Wednesday, the 24th of July, 2019. It's 8:01 a.m. in Chicago, 9:01 Eastern U.S. time. This is episode 1562. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is mixed. A slight risk off from yesterday's close in equities. The main push here is the European markets traded lower following a mixed session in Asia. German, French, and European preliminary manufacturing PMI missed expectations, weighing the markets down. Gold is higher, oil is higher, and the U.S. dollar is lower versus the pound, yen, and higher against the euro. That's where we stand. The big thing this morning, of course, is the House Judiciary Committee is hearing from Robert Mueller, the special counsel assigned to the Russia investigation. The hearings on oversight of the report on the investigation into Russian interference in the 2016 presidential election. So I'm not expecting too much there. I don't think there's going to be much said that is really market moving. I would be actually surprised, but surprise creates the best opportunities. But overall, not seeing all that much coming out of that. In terms of what's ahead, we do have a bunch of releases. We had a few, as I mentioned, the preliminary PMI, market PMI numbers. We do get the U.S. market PMI numbers for July at 9:45 Eastern, new home sales at 10 Eastern, and then, of course, the crude oil inventories at 10:30. The crude oil inventories expecting a draw of 4.011 million. The prior is 3.116 million. Gasoline expecting a draw of 730,000 barrels. And that wraps up the scheduled releases. So not too much to comment on there. It is summer trading. Here's the review segment. Yesterday, the expectation was for a drop towards 29.93. The primary expectation is a drop towards 29.93 on a gap up. Remember that Monday was really a sluggish day with an excess high, and I was prepared for it to drop as far down as 29.90. 29.90 puts us right here. I mean, this is kind of textbook price action potential support right there, right? You see that? And then we have an excess here in that there was very little volume traded on that spike up on news, and the expectation is we would dive in there and then move out and head towards what I indicated as 3009, right? This is what we talked about yesterday. You are, of course, always welcome to go to my YouTube channel. Just search for Futures Trader 71. Go see yesterday's Trader Bite as it happened, so you can see the narrative behind this expectation. Here's what actually happened. There it is. We open. We move back into, where do we go? 29.90 on the low, right? The IB is 29.90.75. 29.90 on the low, basically, and then we push. And where do we push to? 3,008 and a quarter instead of 3,009, with a weak high on the close and neutral extreme up day type. We left the point of control behind inside of the IB and built a second distribution, two distributions, and therefore this low volume node, which I was looking for it to be tested yesterday, 3001, just would not test it after the news event. The news event yesterday that led to this big push up, in case you weren't here, having iced tea on the porch or whatever on a hot summer day maybe. the news was that trade talks were resuming with China and that a delegation is going to head over there to try to figure things out. The market likes such things. So that's how we finished up yesterday. We had a pretty decent kind of drive-ish behavior. What are the setups yesterday? The initial is right there. I tend to pass on these. I don't like to take the mid setup or really any setup that is market generated within the first 20 minutes of trading. So my rules make it so that I pass on these. The secondary was right there, which was quite a push from 95. Actually, the secondary was right here at 95. Even there was a collision at 95 and a pullback to this area where it first collided, and that set up the short for the push into the prior range, and the expectation is a pullback and a continuation to the close, and a continuation then to the naked point of control, which is another high liquidity area, as I talked about yesterday, for the pop higher. That's what I was looking for, but the market really couldn't care less what I'm looking for. And you know what? It couldn't care less what you're looking for. The market's going to do what it's going to do. It is controlled by forces outside of ourselves. It's controlled by group forces, right? So here we are. We push higher, and we're not able to test the low volume node. And I'm looking for this area this morning to be a key test area, but guess what? The market's trading right here at 3,000 and a quarter. It is right on top of this area right now, and so that trade has been taken away. It would be the obvious trade. Carrying the close, the strong neutral extreme close into the session, we have a selling bar as soon as we reopen, and then we go predominantly sideways into the overnight session. We take out yesterday's high in the overnight session by one tick. Right at the reopen, we would expect normally that it would move higher before it sells off. And it immediately sells off. What does it sell off to? 3,001. That's the price I was looking for right after the pop higher. It sold to 3,050, and then from there it just kind of walks up until the Europeans come in, and then the Europeans come in and just sell it, and it remains under the mid VWAP. We're in the point of control, right on top of the Millennium Figure, a crapola area to be in. And what do? We build the point of control right on top of the low volume node, right on top of the high of the prior day. So we have a low volume node, the high, and then we build on top of it. So the market is tested below the 3,000 and above the 3,000 and is holding steady here. The scene of the crime from the China news yesterday was 29.97.75 before we saw a burst in the order flow from that news, and we're right back there. So the opening area this morning from the overnight session just not ideal, man. Just not ideal. It just takes away a key line in the sand that makes it easy to define risk, this low volume node. I love double distributions for that reason. Makes it very difficult to determine which side the market wants to be on. It's opening right in between. Again, it's trading right here, right now. Okay, right in the low volume node. So that means, what does that mean for me? It means hands off on the open. Hands off. Do the sellers come in, push into the lower distribution, the low high volume node? Do they push into the lower distribution and then hold and continue? In which case, I'm only interested in trading from that side. I'm interested in a test of this entire range down to yesterday's low. So it puts 29.90 back on deck. Or does it open, test down, push higher, and move into the upper distribution? If it does, then I'm looking for a test of the week high, 3,008 and a quarter. 3,008 and a half is the overnight high, so very probable that it'll take that. It's likely to take that. And then from there, what we have is a high at 3,009 and a quarter, 3,975, and probably a very quick push into 3014. And so if it takes the upper distribution and holds it, then 3014 becomes a key target area and above. And I'm trading from the long side. Okay. Just remember stock zones. These gray areas are the areas I'm looking to put on a structured trade, meaning more size. And they're like tissues. They're like Kleenex, right? Once it's tested from one side, I tend to not to recycle that level for a second or third or fourth test. It's really it's just it's kind of a fabricated rule, but what it does is it prevents me from taking the same trade over and over, or trading a weak high or double top or whatever. As a lot of people think those are double tops or resistance points, I don't see them that way. So that's where we stand. Oh, somebody's hurt, I guess. And so let's look at what we're expecting today. Again, it's really hard to play this out because the primary scenario is really dependent on which side the market on open orders come into and which side sustains. So I'm going to give you one scenario today. We're likely to open in an open auction in range, and then we're gonna draw a line here, a dashed line. And given the way this has acted, my primary expectation is it's likely, since it's below mid VWAP in the overnight point of control, I expect it to test down, get back down into this this point of control area, then pull back to the low volume node, and then move in the direction of the last couple of days of trend. The trend is your friend, and start to squeeze into that 3009 and potentially 3014 before it reverts on the close. Okay, and you guessed it, the secondary scenario is just the opposite. Just the opposite. It opens, open auction, could tip either way, toss a coin, test up into the upper distribution to balance against yesterday's close, to balance the overnight inventory potentially, and then move through the low volume node, build into the low volume node, tag the lower distribution, and then move back into balance. Remember, we've been in balance here for a few days. Here's down, here's up, then we have down, then we have sideways, then we have up. And this could contribute to this idea that we're just trading in a box, and we're reaching the extreme of that box, and so we might come off. It is really hard to say. I'm prepared to go in either direction, and because we're in a low volume node, again, a low volume node essentially says that we're in an area that was previously rejected, very little volume traded there, so we're likely to see a move, a push out of here. There's a higher expectancy of a push out of here as it was seen as imbalance. But opening right on top of a low volume node is just, it's kind of like opening in a vacuum. We just don't know what it's going to do. Okay, so that's where we are today. I'll leave you with those thoughts. One last thing, just in case you're new, please remember that trading is not it's not like, it's not something that's rigged. It's not something that you can study the risk out of. Trading is all about defining risk, having a favorable risk to reward ratio, or R factor, and then taking a very large sample of trades over and over and over to let that edge with the higher payout play out. That's how we make money. And so there's just not that much you can do to study out the risk. So I see a lot of people and I get a lot of questions where it's like, well, what else can I study and what can I do to make sure that the next trade is a winner? The only thing you can do to make sure the next trade is a winner is to sleep well, eat well, exercise, take care of your psychology, take care of yourself. That's it. That's how we respond well to losses. If you're not in good shape, and if you're sitting here thinking that somehow you can get a streak of 12 winners in a row, which is very possible, it's happened to me many times. But it's not based on me exercising or exorcising the risk out of trades. It's just simply me being prepared and in alignment with the market because my mind is in a state where I'm just open to whatever happens. I know that's not going to mean a lot to many people. It sounds like fluff and it's not going to penetrate and get into your knowing as a trader. But I also know that through repetition and through your own experiences, you'll come closer and closer and closer to making this self-realization about trading, about your alignment with trading. Your goal is to find that time frame and the wave in the market with which you have to align yourself. Period. Okay? And then you define a small enough risk for the reward and you do it again and again. You do it as many times as you need to, and your state of mind has to be such that you execute, there is no attachment to the outcome, and you immediately take the next trade. You're not sitting here having a heartache and worrying about your next, worrying about how many more trades you could take and worrying about the fact that you're a loser and you just can't figure this out. You've been doing this a long time and this will never happen. The game is rigged, therefore the market's rigged, blah, 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 blah. It's all nonsense. It's non-productive. Your job is to just understand that losses are just part of the game, just like breathing in is part of breathing out, and you need it to survive. And so this is part of the process, okay? The summer is a good time to kind of internalize that. It's a fact. I don't care if you swing trade or day trade or scalp. The rules are the same. It's the same game. Good luck.